Hello and welcome again to Charles Kelly Money Tips. Hope you're having a good day. Today we've seen some news coming in about the coronavirus, which is spreading further. We've got more doom and gloom forecasts ahead of us, and this has made the stock markets drop even further after having their worst quarter since 1987. That's the quarter January to the end of March, which was of course yesterday. And that reflects the fact that shares in January were at a high, an all-time high in some cases, and the UK was looking at this Boris bounce, weren't we? We were looking at, things were on the up, and there was confidence in the air, and all of a sudden this hits us, and shares have just literally slumped. But there is some good news today, and that's if you're affected by this, the national living wage in the UK has jumped this week by more than 6%. This has gone up by more than 3 times the rate of inflation, in fact, to 8.72 per hour for people aged 25 or over. Now, this, of course, was announced the end of last year by the government and was described as the biggest cash increase ever. Well, I don't know, to most people it's going to be a few pence an hour, but it is something. It means that there's more money going into the economy. And the job retention, the coronavirus job retention scheme means that employers can claim 80% of wages in order to keep staff employed. And I imagine that's keeping things at bay at the moment, and stopping a recession going into a depression. So that's a bit of good news. But as I said, stock markets are just having a dire time, and some people are predicting it could be even worse. I mean, Goldman Sachs, the merchant bank, one of the biggest and most successful merchant banks, expects the US economy to experience a far deeper slump than previously anticipated as the coronavirus pandemic hammers businesses, causing a wave of mass unemployment. And they said that the world's largest economy will shrink on an annualized basis by 34% in the second quarter, compared with earlier estimates of 24%. And economists report that unemployment will soar to 15% by the middle of the year, from a previous 9%. That means that millions of people are going to be out of work. I don't think they've got such a good safety net in America, and we're going to see some tough times. And some people are predicting that there could be more jobs lost than during the 1929 depression. And the governments are doing what they can. They're printing lots of money. Today there was a bond announcement by the UK banks. I think their bond auction will raise 45 billion for the Treasury. That's there in the Times today. It's definitely a world in turmoil at the moment, and things are not likely. I mean, a lot of people are saying, "Oh, there's some cheap shares about," but how cheap are they? Just because a share price has gone down by 20 or 30%, does it mean it's cheap? Does it mean you should buy it? Well, you need to do your own research on that and maybe take some advice. But it doesn't necessarily mean it's cheap, because in January they'd gone up to an all-time high. So a lot of experienced investors like Warren Buffett considered that was overpriced. He wasn't buying anything, and still now he's waiting for prices to fall further before buying anything. And many of these sort of value investors are doing the same. They're not just necessarily jumping in because the share price drops by 20%, for instance. I mean, it's a bit like you see an item on sale in a shop. It says this is on sale, 20% off, and it might look cheap, but what was the price before? 20% from what? The price was maybe just made up last week to go in the sale the following week. You just don't know. So just because a share drops by X amount, you've got to look at the real value of that business. What's the real value? Just like a property, isn't it? If you say an estate agent sends you a property, says price reduced by 20,000, does that mean you should immediately buy it? Well, no, because the vendor probably was asking for too much of the property in the first place. A lot of estate agents go and see a vendor, and the vendor says, "Well, I want 500,000." They say, "Well, it's probably only worth 450." So, "No, I want 500,000." And of course, the estate agent has to go along with it to get the instruction. But eventually, they know that the price is going to have to come down. So you've got to look at what's the real value, and before jumping into the stock market. But because of these drops in the shares, pension transfers, these are people who are trying to take their pensions out of a scheme and put it into their own SIP, self-invested pension scheme, or maybe their self-administered, their SAS scheme, or whatever. And it looks like that pension transfers could be delayed or even stopped. This is after following a Financial Conduct Authority advisory. So if you're in the middle of that, just watch out for that maybe they've said to you, well, we'll give you this amount, and now it could change. They could change the rules. This is where the pension schemes are invested in shares. Now, some pension schemes are invested more heavily than others in shares. So if a lot of people go into that scheme and say, well, we want our money out, and they have to give the money to certain people when the underlying values in that pension scheme are down, then somebody's going to have to pay for that in the long run. And so in order to stop this happening, the Financial Conduct Authority have issued an advisory saying you could delay these transfers. So if people were thinking about getting their money out of a pension scheme and putting it into the stock market while shares are low, that plan could be scuppered. Okay, next thing is interest rates have been cut, as we know, from 0.75 down to 0.1%, the lowest ever. So you'd think, great, mortgage rates, and when you go out to get a mortgage now, they're going to be down as well. But no, they've gone up. It's unbelievable, isn't it? The banks, they get the lowest base rate and they put the rates up to the consumer, you and I, they put it up. How does that work? I don't know. Now, they say there's an increased risk. So, if you're going to lend to somebody and you've got the security of the property and they've got a lot of equity in that property, then I think you've got your risk covered, haven't you? So by putting the rates up, does that really help things? It just increases your risk of that person maybe not being able to pay the mortgage, in my opinion. But rates have gone up. And in fact, I'm looking at one of the mortgages I've got, which is coming to the end of the deal. And I set that deal 2 years ago when rates were higher. And now I said, well, what will I get now? He said, well, there's this. I said, well, that's higher than what I was paying before. He says, yeah, that's right. That's all that's available. So I'm paying about £100 a month more than I was paying under the previous deal. And if I don't take that deal and I just go back to the lender's variable rate, their made up bloody variable rate, my payments are going to double, more than double, if I go on the lender's variable rate. So the banks are having a laugh here, I think. They really are. And that they should be pulled up because the government wants the banks to start lending money, right? They want them to help companies. And the news out today is that they're not doing that. They're messing companies about. They're trying to offer them unfavourable interest rates. They want extra security. They're just being typical banks. You give the banks a lot of money and they hold on to it. So mortgages, gone up. And that's even if you can get a mortgage because they've pulled so many deals. They've pulled thousands of deals that, when I say deals, I'm talking about where they're offering a fixed rate or they're offering fixed rate up to 90%. Now they're pulling all those deals back, and some lenders are saying we'll only lend up to 60% loan to value. That means if you're buying a property for 100,000, they'll only lend you 60,000. Some are saying 75%. So they're pulling in the range, just like they did in 2008 when they had all that money from the taxpayer, and they're pulling in their reins again. And of course that causes a recession. It's almost a self-fulfilling prophecy, isn't it? Because if there's no money about to buy properties and people can't get the mortgages, then prices are inevitably going to go down. You need a combination of market confidence and a flow of money in order to support a healthy housing market. So we shall have to see how that develops as this crisis goes on, and we'll see. I mean, there was an advisory today saying that maybe 1.7 million people in the UK could be infected with coronavirus. That kind of headline doesn't help the market, does it? It puts panic into the market and fear. Finally then, the tax year end is looming this week. So now's the time to check your ISA allowances. How much can you put into your ISAs? Do you have money in one account you could just move into your ISA to make it tax-free? To claim your tax-free allowances, maybe look at lifetime ISAs. If you invest in, there are other ways of saving money tax-wise by making more risky investments, but you need to seek your financial advisor and talk to them about that. But you can also look at your pension allowance and whether you can top up your pension for this year. And on my blog, you'll find out how you can find your lost pensions or track down your lost pensions. Billions of pounds are held in accounts unclaimed by people, just like lost insurance policies as well, that are just held in accounts unclaimed, and you've got to go and find them. So I put a link there where you can go and find out how to get hold of that money that could be sitting there. This could be, you might have worked for a company 20 or 30 years ago, forgotten about the pension scheme, and maybe there's some money sitting there, or maybe someone sold you a pension scheme, you kept it going for a few years and then stopped it. That money could be sitting there. So I've put a link there as well. You can also, for lost policies, you can go to the Association of British Insurers and try and find that, or dig out those policy documents from your from your cupboard or wherever you keep them, in a box somewhere in the attic. But you might have money sitting there that you can go out there and claim. So there you go. Thanks for listening, and let's hope this crisis ends sooner rather than later. I think people are only in the second week of this lockdown in the UK, and people are already going a bit mad. That some of them are rebelling and going out on the street. A woman got arrested trying to get on a train today in Newcastle. She didn't get arrested today, but she got arrested and was fined. I think it might have been yesterday. But she tried to get on a train in Newcastle, refused to tell the police where she was going, and they fined her £500, I think, and plus costs, because she wouldn't cooperate, they said. So it's getting to a state where, we're in a police state at the moment. Very unusual. A judge actually spoke out against what he calls a police state. It's very unusual for a former judge to speak out. Former Supreme Court Judge Sumpton spoke out and said, we're in dangerous territory here with the police going over the top with some of their powers. But he commended most of the police in that respect. Some say this is what we've got to do. We've got to keep people at home, because otherwise they'll just go running around the streets and having parties and picnics in the park. So the police are in a difficult position, but there you go. So be careful out there. Keep your masks on when you go out. I wear a mask when I go out. I still think the mask is a good thing, because it stops me infecting anybody else if I sneeze or cough. So I think the mask is a good thing, and wear those gloves and keep washing your hands, as Boris said. Wash your hands, singing happy birthday, happy birthday. It's like we've been told nursery rhymes, aren't we? Then you got Jacob Rees-Mogg saying, constant sneezing causes diseases, and all this sort of stuff. It's really funny. But there you go. Thanks for listening, and have a good evening. Bye for now.